Ray Dalio, Understanding the Hidden Mechanics of the Economy. Ray Dalio is not simply a wealthy investor or a successful hedge fund founder. He is a thinker, a philosopher of economics, and a man who dedicated his life to answering one profound question: how does the economic machine really work? To Dalio, markets are not random chaos. They are driven by patterns, cycles that repeat again and again throughout history. If you learn to recognize these cycles, you can navigate the economy with clarity rather than fear. Born from modest beginnings, Dalio built the world's largest hedge fund, Bridgewater Associates, by relying not on luck, but on deep insight into cause and effect. He discovered that every economic event, booms, busts, inflation, prosperity, is shaped by a few simple forces moving in predictable sequences. But before he unlocked the patterns of global finance, Dalio had to survive his own failures. In 1982, he made a dramatic wrong prediction, believing the U.S. economy was headed for a severe depression. When the market roared upward instead, Bridgewater nearly collapsed. Dalio lost almost everything. That experience became the turning point of his life. It taught him humility. It taught him that certainty is dangerous. And it fueled his relentless pursuit of truth. He rebuilt Bridgewater with a unique culture, radical transparency, and a belief that ideas should be tested, not accepted. Within this environment, he refined two intellectual frameworks that would transform the investing world: economic cycles and principles. Dalio views the economy like a machine composed of billions of individual transactions. Every time a person buys or sells something, borrows or saves, that action contributes to the grand movement of the economic cycle. The core driver of these cycles is credit, the act of borrowing money today and paying it back tomorrow. When credit is easily available, people spend more. Businesses expand, profits rise, stock markets climb. That era feels like prosperity, but it is also the start of a bubble. Because most of that growth is borrowed from the future. Eventually debt becomes too large to support. People cut spending to pay it down. Businesses struggle. Markets fall. Recession begins. Dalio breaks this cycle into three key phases: short-term business cycles, long-term debt cycles, and productive growth cycles. The short-term business cycle occurs every 5 to 8 years, those regular ups and downs of the market. But the long-term debt cycle is far more powerful, occurring perhaps only once in a lifetime. Think of the Great Depression in the 1930s, or the global financial crisis in 2008. These events aren't random, they are the mathematical result of too much debt built up over decades. Dalio famously uses a simple idea to illustrate this: debt allows you to spend more than you make. Paying it back forces you to spend less than you make. Expansion. Then contraction. Borrowing happiness from tomorrow, followed by the bill arriving at your door. Yet despite its simplicity, humans repeatedly fall into the same trap, believing rising markets will rise forever. Dalio argues that understanding these predictable cycles gives investors a massive advantage. While others panic in downturns, those who study the patterns anticipate them, and act before the crowd. His economic philosophy became universally recognized when he published Principles for Navigating Big Debt Crises, and later the viral short film, How the Economic Machine Works, which broke down complex systems into clear, logical rules. But Dalio's ideas go beyond economics. His second intellectual cornerstone, Principles, is about personal growth and decision-making. His book Principles reveals the lessons he learned through decades of painful mistakes. Dalio believes regret is wasted energy unless it transforms into learning. Pain plus reflection equals progress. Every error can become a blueprint for improvement. He encourages people and organizations to create systems that make decision-making less emotional and more objective. Bridgewater's culture became legendary for its radical truth and radical transparency. Employees were encouraged, even required, to challenge leaders, including Dalio himself. Every idea was judged by its merit, not by its source. This approach created breakthroughs, but also controversy. Critics said it was too harsh, too uncomfortable. Dalio argued that comfort rarely leads to excellence. Just as in the economy, the human mind must cycle through stress to grow stronger. At the heart of his philosophy is a belief that reality is not the enemy, it is the teacher. Dalio encourages everyone to embrace truth, even when it hurts. Because truth is the path to better decisions, better results, and ultimately, better lives. Combining economic cycle mastery and principle-based thinking, Dalio built a model for success that is both deeply analytical and deeply reflective. He studies history obsessively, because the past is full of repeated mistakes and repeated wisdom. If you understand what has already happened hundreds of times, you gain clarity about what will happen next. This mindset helped Bridgewater correctly anticipate major global shifts, like the 2008 financial crisis, years before the world saw them coming. Dalio's life mission became helping others see what he sees, that economic chaos is not chaos at all, it only appears chaotic to those who don't understand the patterns. In this documentary series, we will explore Dalio's biggest breakthroughs, how credit cycles dictate the fate of nations, why debt crises are inevitable, and how investors can protect, and multiply, their wealth by respecting economic reality rather than fighting it. We will also explore the philosophy behind his book Principles, a guide to thinking independently, making wiser decisions, and building a life free from self-deception. Ray Dalio is a rare combination. An investor with the mind of a scientist and the heart of a philosopher. And through his work, he gives us tools not just to build wealth, but to understand the world. In the next part, we will dive deep into the short-term and long-term debt cycles, how they form, how they collapse, and how those who study them can stay ahead while others fall behind. The short-term and long-term debt cycles, predicting the booms and busts. To Ray Dalio, the economy is not a mystery, it is a cycle driven by patterns as old as civilization itself. If you understand these patterns, you can see what others cannot. You can anticipate crises instead of being destroyed by them. You can take advantage of opportunities when everyone else is paralyzed by fear. And the most powerful patterns of all are the debt cycles. Dalio divides these cycles into two main types, the short-term business cycle and the long-term debt supercycle. The short-term cycle is the day-to-day heartbeat of the economy, typically lasting around 5 to 8 years. It is driven largely by the decisions of central banks, credit growth, spending booms, and temporary corrections. These are the recessions investors often experience multiple times in a lifetime. But the long-term debt cycle is the one that changes history. It takes 50 to 100 years to unfold. It is the force behind the rise and fall of great powers, the destruction of currencies, and the resetting of economic systems. It is the financial earthquake that resets everything when debt becomes too great to manage. Dalio calls it the big cycle. To understand these cycles, imagine a world where people can buy now and pay later. Credit increases spending. Businesses earn more. Asset prices increase. People feel richer. So they borrow even more. That is the beginning of a boom. But the boom plants the seeds of its own destruction. Because debt is a promise. And promises must be repaid. When debts grow faster than incomes for too long, the economic machine begins to strain. Borrowers struggle. Banks tighten lending. Spending slows. Asset prices fall. Confidence collapses. That is the beginning of the bust. Dalio emphasizes that this cycle is not a failure of capitalism, it is part of how capitalism works. It is the cost of progress. And yet, each generation behaves as if the rules of the cycle no longer apply to them. Every era of prosperity convinces people that growth will continue forever. Every downturn convinces them that recovery is impossible. Both beliefs are illusions. Dalio studies the past so he can avoid these illusions. He analyzed hundreds of years of economic history, across dozens of nations, and found the same patterns repeating again and again. The short-term cycle is like a breathing rhythm. But the long-term debt cycle is like a lifespan. In the early stage of the long-term cycle, debt is productive. People borrow to invest in real growth, factories, technology, education. Income rises alongside debt. Living standards improve. The economy becomes stronger. But over time, borrowing becomes less about investment and more about maintaining lifestyle, speculation, and fueling asset bubbles. Debt no longer produces enough income to pay itself back. People use new debt to pay old debt. The system becomes fragile. Eventually, the long-term cycle reaches a breaking point, a deleveraging. And deleveraging is not painless. It is the moment when debt promises can no longer be fulfilled. There are only 4 ways out: people can pay down debt, slow and painful, debts can be restructured, lenders take losses, governments can print money, inflation reduces the real burden of debt, or defaults occur, the system collapses. Which path a nation chooses determines whether crisis leads to renewal, or devastation. Dalio often references 2 pivotal moments in U.S. economic history, 1930 to 1945 and 2008 to 2020. Both were long-term debt cycle turning points. The Great Depression was a violent deleveraging. The stock market collapsed. Banks failed. Unemployment soared. Then the government stepped in with massive public spending and eventually wartime economic mobilization. Later, inflation surged, helping reduce the burden of debt. The second major deleveraging came after the global financial crisis of 2008. But this time, central banks aggressively printed money through quantitative easing. Markets recovered quickly. Wealth soared, particularly for those who owned assets. But Dalio warns, printed money is not free. It alters the balance of power. It creates long-term consequences in currency value and wealth inequality. And the long-term debt cycle is not finished. According to Dalio, the United States and much of the developed world are now entering the late stage of the long-term cycle. Debt is high. Interest rates had to remain low just to keep the system functioning. And the gap between the wealthy and the poor is widening, conditions that historically lead to social conflict and political populism. Dalio believes we are at a moment that resembles multiple past transitions: the decline of the British Empire after World War II, the end of the gold standard, and even the decline of dynasties in ancient civilizations. He argues that history does not repeat perfectly, but it rhymes. When debt burdens become overwhelming, when wealth inequality grows extreme, when trust in institutions breaks down, when rival powers rise to challenge the dominant power, the cycle reaches a critical turning point. And a new order emerges. Dalio calls this the changing world order. For centuries, economic power has moved like a relay baton, Spain to the Netherlands to Britain, Britain to the United States. Today, he believes the baton may be shifting again, toward China. Not because America is weak, but because the cycle itself demands transformation. Dalio's goal is not to create fear, but awareness. Investors who ignore cycles get crushed by them. Investors who understand cycles adapt before it's too late. Dalio uses a simple principle to guide decision-making: if you worry, you don't have to worry. If you don't worry, you should worry. In his view, the key to long-term success is diversification, not only across companies, but across countries, asset classes, and even currencies. Because when a long-term debt cycle ends, entire nations can spend years, or decades, recovering. The winners are those who prepare ahead of time. As we move into the next section, we will explore Dalio's most influential contribution, principles, the personal and professional philosophy that shapes every decision he makes. How can we take emotions out of investing? How do we avoid the illusions that trap others? How do we build systems that guide us to truth? Dalio believes that success is not luck. It is a result of doing the right things over and over again. And those right things can be learned, repeated, and mastered, by anyone willing to think clearly. In Part 3, we will uncover how Ray Dalio turned his biggest mistakes into universal lessons, and how you can apply his principles in your own journey toward financial clarity, personal growth, and long-term resilience. Mastering risk, adapting to change, Ray Dalio's lasting legacy. Ray Dalio's journey from a curious young investor trading penny stocks to a global economic thinker has been marked by a relentless search for truth. At Bridgewater Associates, he built not only the largest hedge fund in the world but a living laboratory, where ideas battled for survival and only the most logically sound strategies rose to the top. Yet Dalio's influence doesn't end with market success. His mission has evolved into something much larger, teaching the world to understand risk, cycles, and human nature through practical, evidence-based principles. The question remains, what makes his legacy so enduring? One answer lies in Dalio's unique relationship with risk. Most investors fear downturns and crises. Dalio embraces them, dissects them, learns from them. In his view, risk isn't the enemy, being blind to risk is. His most famous solution to this problem is the all-weather portfolio, a strategy designed to perform across every economic environment. It wasn't built on guesswork or optimism. It was engineered through decades of studying how the economy behaves, not how we want it to behave. Growth, recession, inflation, deflation. Dalio argues that these forces shape the financial world in repeating cycles, and if we know the patterns, we can prepare rather than react. This mindset is further reflected in one of his most foundational beliefs: don't try to forecast the future. Design a system prepared for anything. Many investors cling to predictions, stock price targets, market timing, hopeful narratives. Dalio prefers adaptability. Markets surprise us. Policies change. Nature intervenes. Human emotions distort logic. Instead of pretending uncertainty doesn't exist, Dalio encourages people to welcome it like a complex puzzle waiting to be solved. Every market crash reveals hidden weaknesses. Every boom exposes unsustainable illusions. Through this lens, each mistake becomes a valuable data point, fuel for improvement, not shame or regret. But Dalio's teachings extend well beyond portfolio strategy. His philosophy emphasizes personal evolution as a necessary part of financial success. He believes that the biggest threats to our goals are internal: our ego, our biases, and our emotional reactions. In Bridgewater, employees were trained to identify their strengths and weaknesses with radical honesty. Performance reviews were transparent, not to punish, but to accelerate growth. Everyone was encouraged to seek out their blind spots, because in investing, blind spots are expensive. Dalio often reminds people, pain plus reflection equals progress. Struggle isn't failure. Avoiding reflection is. This concept became the heart of his book, Principles. Initially a private document used inside Bridgewater, it later evolved into a global bestseller influencing leaders, entrepreneurs, and ordinary individuals. The book provides tools for clear thinking. Decision frameworks, problem-solving techniques, methods for building stronger teams and more rational strategies. It teaches that life is like a game. The better you understand the rules, such as cause and effect relationships, incentives, and psychological tendencies, the more effectively you can navigate challenges. Success isn't about genius. It's about continuous learning guided by objective truths. Dalio's pursuit of truth also led to one of his most ambitious creations, the economic machine model. This framework explains how credit, productivity, and spending interact like gears in a massive system. He simplifies macroeconomics into a language anyone can understand: short-term cycles, long-term cycles, debt booms, deleveragings, prosperity, correction. These forces have driven human financial behavior for centuries, in every nation, every system, every generation. By sharing this knowledge openly, Dalio has given investors a powerful compass, helping them step back from the noise and recognize where we are in the cycle. However, no visionary story is without controversy. Some critics argue that Bridgewater's radical transparency pushes human psychology too far. Others claim that Dalio's macro predictions sometimes miss the mark. Yet even these criticisms align with his overarching principle: reality is complex, and improvement never ends. Dalio himself openly discusses his past failures, from early market misjudgments to personal missteps. He views transparency not as a weakness but as a bridge to deeper insight. If truth is the goal, there can be no fear of being wrong, only fear of refusing to learn. Beyond finance, Dalio has turned his attention to the future of civilizations themselves. In his work, The Changing World Order, he analyzes history's great powers, from the Dutch and British empires to modern China and the United States, showing how rising and declining nations follow eerily similar patterns. His conclusion is not pessimistic but cautionary: societies that ignore their internal problems eventually collapse under their own weight. But those that adapt, embracing innovation, fairness, productivity, and education, rebuild strength and prosperity. Dalio encourages people to recognize both the risks and opportunities that lie ahead. Global debt levels, political divisions, technological disruptions, and environmental challenges are reshaping the world. Yet those who remain flexible, informed, and principle-driven can not only protect themselves but thrive as new winners emerge. He advises investors to maintain diversification, seek truth from real-world data instead of assumptions, and act with humility, because no one individual can outsmart the entire system. The key is to flow with the tides of change rather than resist them. Today, Ray Dalio stands as more than a billionaire investor. He is a mentor to millions. Through books, lectures, documentaries, and free educational tools he continues to share. His legacy is built on empowerment, helping others think independently, manage fear, and see the world more clearly. He teaches that mastery is not found in secrets or shortcuts, but in principles rooted in reality. Look at where we came from. Understand where we are. Prepare for where we might go next. And always remember, the greatest investment you can make is in expanding your understanding. Ray Dalio's philosophy can be summarized simply: be radically open-minded. Study how the world works. Learn from every mistake. And build a system that endures, in business, in life, and beyond. For Dalio, principles aren't just a strategy. They are a blueprint for a meaningful existence. The economic cycles will rise and fall. Fortunes will be made and lost. But those who think clearly and act with adaptability will always find their path back to success. In a world filled with uncertainty, one truth stands firm: principles endure where predictions fail. Thank you for joining us on this deep exploration of Ray Dalio, a man who turned curiosity into clarity, mistakes into wisdom, and uncertainty into opportunity. From understanding the rhythm of economic cycles to applying principles that reshape decision-making, Dalio's teachings remind us of a powerful truth: success does not belong to those who guess the future, but to those who prepare for it. As investors, as thinkers, and as individuals navigating a constantly changing world, our greatest advantage lies in our ability to learn, honestly, relentlessly, and without ego. Ray Dalio showed us that when we confront reality as it is, not as we wish it to be, every challenge becomes a stepping stone toward progress. If this documentary inspired you to think differently about money, markets, and the principles that drive long-term success, then make sure you hit that subscribe button and turn on notifications, because this channel is dedicated to uncovering the minds and strategies behind the greatest investors in history. Like the video, share your thoughts in the comments, and let us know which legendary investor or financial philosophy you'd like us to explore next. Stay curious. Stay disciplined. And always remember: principles endure. Predictions fade. Thank you for watching. See you in the next episode.